Yeah, I mean, I'm personally, accumulating as much Bitcoin as I can right now.
Hey, what's up guys? The correlation between stock market and Bitcoin is still quite strong. It might be changed soon. In this video, we will take a look at why CEO of Real Vision, Raoul Pal, is buying Bitcoin right now as much as he can. This video is brought to you by switchhere.com. SwitchHere is a reliable cryptocurrency exchange service that allows you to quickly buy cryptocurrency with your own credit card. Users will also receive 1% cashback on their purchases. It is very good to those who buys and sells cryptocurrency often. This is non-custodial exchange, which means they do not hold your coins. When you make a purchase, coins will go directly into your deposit address that you provided. If you are interested in these quick crypto purchases, link is in the description box below. First, let's take a quick look what is going on with Bitcoin today. Bitcoin is currently slightly above $7,000 a coin. It declined from the last 2 days from $7,200 to the current price. Last time Bitcoin was around these price ranges was at the beginning of 2020. Now let's take a look at the stock market. More specifically, let's take a look at S&P 500. S&P 500 is also in the red today. It's down by 1% for the day so far. It's currently trading at around 2,840 points. Last time it was around this price range, it was all the way back in June 2019. Let's take a look at both charts together. The blue line is of course S&P 500 and the red line is Bitcoin. We can see there is decent correlation over a short period of time, but it does not mean that this correlation will continue throughout the future. Also, if we compare these two charts, we can notice that Bitcoin is more volatile than S&P 500. S&P 500 recent all-time high was at 3,400 points, and it dropped all the way till 2,200 points. That's a 35% decline. Bitcoin, on the other hand, dropped from the recent highs of about $10,000 all the way under $4,000. That's a 60% decline, almost double the S&P 500 decline. But once again, you should not be scared of volatility. It provides a better buying opportunity during the short period of time. S&P 500 was pretty expensive before the drop and even declined by 35%. It's still not cheap if you look at the earning multiples. It just amuses me when people continue to say that stock market or another asset class for that matter is very expensive just because it reached new all-time high. If it reached new all-time high, it does not mean shit. Stock market reaches new all-time high 80% of the time throughout the century. What you should be paying attention is the price relatively to earnings or other fundamental value. Currently, if you look at S&P 500, it has price to earning multiple of 20, still above average. Earning multiple will also increase as companies will report poor earnings and prices are currently way higher. Going back to volatility, just like decent drop, Bitcoin had a strong upside. Bitcoin increased from under $4,000 all the way to the current price of $7,000, and that would be 75% increase, while S&P 500 increased from 220 points to the current price of 280 points. That's a 27% increase. Let's take a look what Raoul Pal and Don Moorhead have to say about Bitcoin and stock market correlation.
People are confused why Bitcoin's not done so well, because I think they're thinking of it as a hedge to traditional markets. And I see it slightly differently. I see it as a call option on the future, on a future system. But how do you perceive it? And what do you think about the price action of Bitcoin and how this might evolve over this, call it next 24 months?
Yeah, it's a great question. Obviously, that's what we spend our time trying to figure out. The one thing I would say is I don't think I would have called it a hedge to the global macro. What I would have said is it's uncorrelated with global macro. So that is, I think, its strongest advantage is over long periods of time, it has very little correlation to everything else, to gold, oil, S&P 500. In the down spikes, there have been 5 down spikes since Bitcoin really became tradable. And in each of those, it's been an average of 8 weeks correlated to, with a 0.5 positive correlation to the S&P. And so when the markets gap straight down, Bitcoin does gap straight down with it. But over a period of weeks, that correlation starts to break down and it starts to trade on its own based on its own fundamentals. And so when this crisis started, we actually reduced risk in our hedge funds. But we've already covered that back and are now fully long in our discretionary funds. Because as the dust settles, the correlations are going to break down again like they have historically, and it'll be able to trade on its own. And then when people see, Bitcoin and other blockchains are actually quite useful when a bunch of these other systems are starting to, get hampered by all the restrictions in the physical world, people will start realizing the fundamentals are not only unaffected by this crisis, they're actually, quite positive for blockchain itself. And so our forecast is Bitcoin's probably going to do, very well, but it's over the next 12 months, not the next 12 hours. And what we said in our investor letter a couple weeks ago is we think it's going to take 2 or 3 months for institutional investors to basically just triage the damage to their existing portfolio assets, just try to figure what the heck just happened. And then it's going to take 3 to 6 months to really look at new opportunities like distressed debt, right? There was 10 years of no distress at all, and now there's going to be all kinds of amazing opportunities. There's going to be things like gold and cryptocurrencies. And so I think it is going to take 6 to 9 months for the markets really to get going. But I think everything, we've taken a super sober look at this, and there's some really big economic impacts. But the only conclusion we can come to for cryptocurrency is that in the, say, 6 to 9 month time frame, it is going to be very positive.
Yeah, I mean, one of the things that correlation that picks up between the S&P is simply liquidity. So, everything gets correlated, has a correlation of 1 in a liquidity event, and that's okay. But as you say, it then decouples very quickly. Then it has 0 correlation, which is extraordinarily powerful as an asset. That has, it's not a huge asset. It's still whatever, 200 billion or just under. But it's very powerful to have an uncorrelated asset in this world. And everybody I speak to is definitely becoming interested. The family offices. I don't know a family office really that doesn't have a bit of it now.
Yeah, and so we've taken that thought process one step lower in our analysis, and within blockchain, we have a very similar phenomenon going on. Is that in the immediate down spike, everything becomes highly correlated, and Bitcoin typically outperforms, and so it has outperformed everything else in these stressed markets. So one of our first moves was to increase, basically double our Bitcoin exposure at the expense of the smaller non-Bitcoin assets. And then we also increased our systematic trading, which does well in very stressed markets. And so another view we hold in crypto is that Bitcoin is going to outperform, again, for a period of, say, 3, 4, 5 weeks, that kind of order of magnitude, not months or years. And then, over time, we'll reduce that and get back to our normal allocation.
What I really like that Raoul Pal said, the stock market correlation to Bitcoin is simply a liquidation phase. It doesn't matter if it's stock market, Bitcoin, or even gold. When shit hits the fans, people panic, consumer confidence decline, price drops, and people sell anything they can get their hands on to get paper dollars. Which is kind of funny to me. They do not want to sell at higher prices, but they're willing to sell at lower prices. Unless they have no money and they have to pay their bills or whatever, in that case it's understandable. Also, Raoul Pal indicated that lots of family offices and hedge fund managers become more and more interested in Bitcoin. Let's take a look at this clip why Raoul Pal specifically is accumulating as much Bitcoin as he can.
Yeah, that's total sense. And again, this is still early phase, so the ability to be able to pick up cheaper investments in the space, if you're right about the macro view about where this is going, and obviously I agree with it, we don't get many of these opportunities in our lifetimes, is my view. I've not seen risk rewards like this ever.
Yeah, that's why I'm all in, is that, like you say, this is a call option on the future payment rail of the world. And yeah, could go to zero, but could go up 10x, right? And you just don't see those trades.
Yeah, I mean, I'm personally, accumulating as much crypto, Bitcoin as I can right now, just because I too believe that within this, the hard money elements of Bitcoin, even discounting for the volatility, but looking at the risk reward, makes it an extraordinary opportunity that I've literally never seen before. And as you know, I've been involved in this space on and off since about 2012, and I just don't see any other outcome. I've never, even for gold as well. I think, look, gold can go up 3 to 5x, Bitcoin can go up 50 to 100x over the next 5 years, and that's you don't see a whole asset class go up 100x.
I'm not surprised that Raoul Pal is buying as much Bitcoin as he can. He is a former Goldman Sachs hedge fund manager with many insights information around institutional investors. Personally, I always wanted to work for Goldman. Too bad they always decline my applications. Raoul, if you're watching this, hook me up. Personally, I also bought some Bitcoin and Ethereum recently. I bought Bitcoin under $6,000 and Ethereum under $115. I'm thinking to buy some more Bitcoin, as I believe $7,000 is still pretty cheap price for BTC. 10x from here or even 100x is hard to imagine, but there is nothing new. Bitcoin has been increasing by those multiples in the past number of different times. And I believe Bitcoin is safer than ever before, considering the fact that currently we almost reached new all-time high at hash rate power and brand recognition. Also, Bitcoin halving is just 3 weeks away. It's not like Bitcoin will 10x after the Bitcoin halving, but over time it should appreciate in value. Raoul Pal and Don Moorhead also discuss other altcoins. Is there going to be thousands of altcoins or just one winner? Let's take a look.
So there's several big ecosystems out there between Bitcoin, Ethereum, Ripple, EOS. How do you see the evolution of those, and how do they all play together? I'm incredibly concerned how tribal it all is right now, but I kind of know in a pragmatic world that there's a space for everybody. What's your view on all of that?
Yeah, it's a fascinating question. I'm sure there's going to be some great movies made about this someday. I would say there isn't a space for everybody, but there isn't a winner take all. And so that's a really frustrating kind of lukewarm water answer to your question, is that we have 2,000 tokens right now. I don't think we're going to have 2,000, and I don't think we're going to have just one. And there is a bit of a almost religious fervor in this space where, the disciples of one group will be, really, really excited about the other group. And so the punchline of this whole long diatribes, I think there's going to be a single digit number of very important blockchains. Each one's going to have its own use case. And it's already starting to shape up where you're seeing, Bitcoin not really change very much, but be really good at storing wealth. And so people like to call it digital gold, and I'm fine with that. You see Ethereum be really dynamic, and they're already going to Ethereum 2.0, and it's really changing, really ambitious. And then you have kind of the next generation of things like Polkadot that are coming, that are doing very ambitious things. And then Ripple's taken a kind of enterprise SaaS version of this and trying to work with all the banks and work with all the regulators to essentially replace SWIFT. They probably don't like it when I say it like that, but I think it's the easiest shorthand for what they're trying to do. So I think there's space for 8 or 10 of those use cases in the long run. We're not going to, but the main point is we're not going to have hundreds and hundreds of very similar quote altcoins.
I think Dan Moorhead made a very good point about altcoins. We do not need 2,000 altcoins, but those 10 or 8 who will survive will dominate new financial industry with their own use cases. Like Bitcoin, for example, can be a great store of wealth. Ethereum, with their decentralized applications and smart contracts, can be a leader in decentralized finance. Ripple XRP working with regulators and banks to quickly transfer money, and so on. Let me know what do you guys think about Raoul Pal and Don Moorhead interview and their standpoint on crypto. Personally, I really liked it. Just like you should smash that like button and subscribe if you haven't.